Hello viewers, welcome to the channel Amazing Civil Engineering Studies. Time to enter the world of civil engineering. Here we will learn about different concepts related to civil engineering. Please subscribe to the channel and press the bell icon for more new updates. In today's video we are going to discuss about estimation. Valuation terms related to valuation. What is valuation? Valuation is the technique of estimation or determining the fair price or value of property such as building, a factory, other engineering structures of various types, land, etc. By valuation, the present value of a property is defined. The present value of property may be decided by its selling price, or income, or rent it may fetch. The value of property depends on its structure, life, maintenance, location, bank interest, etc. Important terms in valuation. Gross income. Gross income is the total income and includes all receipts from various sources. The outgoing and the operational and collection charges are not deducted. Net income or net return. This is the saving or the amount left after deducting all outgoings, operational and collection expenses from the gross income or total receipt. Outgoings. Outgoings or the expenses which are required to be incurred to maintain the revenue of the building. Repair. It includes various types of repair such as annual repair, special repairs, immediate repair, etc. Amount to be spent on repairs is 10–15% of gross income. Management and collection charges 5–10% of gross income may be taken for this purpose. For small building it may not necessary to consider it. Theses include expenses on rent collector, chowkidar, liftman, pump attendant, sweeper, etc. Loss of rent. The property may not be kept fully occupied. In such a case a suitable amount should be deducted from gross rent under outgoings. Scrap value. Scrap value is the value of the dismantled material. That means after dismantle we will get the steel, brick, timber, etc. In case of machines the scrap value is metal or dismantle parts. In general the scrap value is about 10% of total cost of construction. Scrap value equals sale of usable material, cost of dismantling and removal of the rubbish material. Salvage value. It is the value of the utility period without being dismantled. We can sell it as a second handle. Market value. The market value of a property is the amount which can be obtained at any particular time from the open market if the property is put for sale. The market value will differ from time to time according to demand and supply. This value changes from time to time for various reasons such as change in industry, change on fashion, means of transport, cost of material and labor, etc. Book value. book value is the amount shows in the account book after allowing necessary depreciation. The book value of property at a particular year is the original cost minus the amount of depreciation year. The end of the utility period of the property, the book value will be only scrap value. Rateable value. Rateable value is the net annual letting value of a property, which is obtained after deducting the amount of yearly repairs from the gross income. Municipal and other taxes are charged at a certain percentage on the rateable value of the property. Obsolescence. The value of property or structures become less by its becoming out of date in style, in structure, in design, etc., and this is termed as obsolescence. Annuity. It is the annual periodic payments for repayments of the capital amount invested by a party. Annuity is either paid at the beginning or at end of each period of installment. Capital cost. It is the total cost of construction including land, or the original total amount required to possess a property. Capitalized value. It is the amount of money whose annual interest at the highest prevailing rate of interest will be equal to the net income from the property. Sinking fund. A certain amount of gross rent is set aside annually as sinking fund to accumulate the total cost of construction when the life of the building is over. This annual sinking fund is also taken as outgoings. Depreciation. It is the loss in the value of the property due to its use, life, wear, tear, decay and obsolescence. The general annual decrease in the value of a property is known as annual depreciation. Usually, the percentage rate of depreciation is less at the beginning and generally increased during later years. Year purchase. It is defined as the capital sum required to be invested, in order to receive an annuity of Rs1 at a certain rate of interest. The capitalized value which needs to be paid once for all to receive a net annual income of Rs1, by way of interest at the prevailing rate of interest in perpetuity, i.e. for an indefinite period, or for a fixed no of days. Suppose the rate of interest is 5% per annum. One has to deposit Rs 100 to get Rs 5 per annum. Now, to get Re1 he has to deposit 100/5 equals Rs 20 per annum. Therefore, YP equals 100/rate of interest equals 1/R. In case of life of property is anticipated to be short and to account the accumulation of sinking fund and interest on income of the property to replace capital, the year's purchase is suitably reduced. Year's purchase, YP, equals 1/R plus SC. Example: calculate the value of year's purchase for a property if its life is 20 years and the rate of interest is 5%. For sinking fund the rate of interest is 4.5%. Solution. Here, R equals 5%, R1 equals 4.5%. Y.P equals 1/R plus SC. Coefficient of sinking fund, SC, equals R1/1 plus R1, N1, equals 0.0319. Year purchase equals 1/0.05 plus 0.0319, equals 12.21. Security of loans or mortgage. When the loans are taken against the security of the property, its valuation is required. Mortgagor, the person who takes he loan, is known a mortgagor. Mortgagee, the person who advances the loan, is known as mortgagee. Mortgage deed, the relevant document for the mortgage. Freehold property. A freehold property means that the owner is in absolute possession of the property. An owner can utilize the same in any manner. Leasehold property. It indicates the physical possession of the property, and the use of it may be allowed by the original owner as per lease document. Taxation. To assess the tax of property, its valuation is required. Taxes may be municipal tax, wealth tax, property tax, etc., and all taxes are fixed on the valuation of the property. Rent fixation. In order to determine the rent of a property, valuation is required. Rent is usually fixed on certain percentage of valuation, 6% to 10% of the valuation. Compulsory acquisition. Whenever a property is acquired by law, compensation is paid to the owner. To determine the amount of compensation, valuation of property is required. Valuation of a property is also required for insurance, etc. Difference between depreciation and obsolescence. Depreciation. Obsolescence. This is the physical loss in the value of the property due to wear and tear, decay, etc. The loss in the value of the property is due to change of design, fashion, in structure of the other, change of utility, demand. Depreciation depends on its original condition, quality of maintenance and mode of use. Obsolescence depends on normal progress in the arts, inadequacy to present or growing needs, etc. This is variable according to the age of the property. More the age, more will be the amount for the depreciation. This is not dependent on age of the building. A new building may suffer in its usual rent due to obsolescence. There are different methods by which the amount of depreciation can be calculated. At present there is no method of calculation of obsolescence. Note: if the outgoing are not given in the question and are to be assumed, the following percentage may be taken for solving the problems. Repair at 10% of the gross income or rent. Municipal taxes at 20% of the gross rent. Property tax at 5% of gross rent. Management and collection charges at 5% of gross rent. Insurance premium at 0.5% of gross income. Miscellaneous charges at 2% of the gross rent. Thanks for watching. For now, please subscribe, like, share and do not forget to press bell icon.